Hello and welcome. You're watching Money 9. I'm Sakshi Batra, and on this show, we discuss all about market fundamentals and see how the experts are really valuing the markets right now. What is the kind of trajectory that the markets are supposed to take from here on? How should you prepare yourself and position your money in the equities, and where will money be really made? All of these questions I will pose to our guest today. I'm joined by Mr. Kranti Patini from Wealth Mill Securities on this edition of Market Meter. Mr. Patini, good afternoon, and thank you very much for taking out time for us yet again. It's good to have you back with us, and good to see that the markets are also back in the green. Not what we had seen 2 days of trading session in this week. It's a truncated week of action, but 2 days they were actually complete declines in the markets. Almost 1,100 points gone for the Sensex in those 2 days, and people were beginning to worry that perhaps these are the first signs of panic selling that we are seeing. But the bulls are back in action today. How are you looking at this entire setup? Was that decline only an aberration, or will we see some more kinds of patterns of bouts of volatile moves on the markets? How are you looking at the market scenario?
Sakshi, if we observe the market trends at present, as we have been discussing about the range-bound nature of the market, the Nifty is trying to inch above 16,000 level. So market looks very strong. Currently, what we are witnessing is uh, investors are not going for a long-term investing models right now. Okay, the mood in the market at present juncture is before the Q1 earnings and also as monsoon is progressing. At present, the funds and the mutual funds, domestic institutional investors and PMSs, even for the retail investor also, they're not in a position to take the long position. Currently, the mood and the nature, the texture of the market is it's a range bound nature. So currently, Nifty is stuck up in the range of around 300 points on Nifty, and it's always whenever Nifty comes down to the level of 15,500, 15,600. These are the strong supporting zones for the market, and there is a humongous buying interest is coming into the market because of the gush of liquidity that's there in the market. So we are witnessing a flood of liquidity from foreign portfolio investors on some days, and the domestic institutional investors are a regular buyers at every dip. And at other side, vice versa, what we are witnessing is whenever Nifty goes above 15,900, the range, we are witnessing a selling pressure is again coming on the market. So this is the market investors need to keep in mind, enter into the stocks which have a highest margin of safety. So investors need to think about margin of safety while building up any positions at this juncture. But it is a handsome trade for the traders and even delivery based traders. Investors also sometime they can play with the delivery based nature of the market, and they can make some quick bucks in these kind of market moods and in these kind of market swings.
Absolutely. So it's a market where, actually the traders are going to be more happy with because of the kind of swings they are getting to be able to make quick buck. But for long-term investors, a word of caution, only stick with stocks which have high margin of safety at this point in time. So that's the word on, what kind of investments and how should you approach your investments. But I want to ask you a little bit more on the sectors right now. I'll talk to you about the earnings and the kind of companies that have come out with this and how to play those earnings right now. But overall, we are again seeing momentum building up in a few sectors. I'll talk to you about realty sector. We have spoken about it before on our show. The metal space is again buzzing in action. And the crude oil prices are also returning from those sharp downtakes. How are you looking at these kind of macro scenarios and looking at these particular sectors for investors who want to invest here?
Sakshi, if we have to look into the market as an investment theme at present, the first category of sectors are sectors with a high visibility. Okay, for example, if we observe the high visibility trend of the market, pharma have a highest visibility of earnings. So the other sector we can name is the IT, which have a highest visibility of earnings, and where margin of safety also high among these both the sectors. And we have auto, which is have a highest visibility of earnings, but it
Yeah.
will take the earnings to peak out in next couple of quarters.
Sure.
So metals, as you mentioned, okay, metals has been buzzing. Of course, on your show, we have mentioned about a stock with the highest margin of safety.
Yeah.
Vis India, the stock has been going up. So
Yeah.
metals also have a highest visibility of earnings. So
Hmm.
right now, the quadrant one with highest visibility of earning goes to pharma,
Okay.
IT, and auto. So these are the
Okay.
sectors investors can position themselves with a high visibility of earnings.
Okay, so positive earnings can actually be expected for these particular sectors, IT and pharma. These are the two sectors that you need to keep in your mind. And apart from that, autos again are the other third sector that, these are the three sectors that you must keep in your mind in case you want to play up the earnings theme right now in the current market scenario. I also wanted to ask you a broader picture. Looking at the kind of cues we are getting across the globe, there is a discussion on high inflation. There is a discussion going on the reversal of interest rates abroad. There is a discussion on the Delta variant, the increasing number of cases in various, parts of the countries in Asia and other parts of the world as well, and how that could derail the economic recovery that we were hoping for. How do you look at markets from all these macro indicators at this point?
Sakshi, as I always mentioned to you, there is always something to worry in the market. Okay, here and there, something will creep up into the market because,
Sure.
given the kind of complex nature of the market is concerned. So, in these complex moving parts in the market, so aligning everything in the market favor is it is highly impossible. It happens in
Right.
once in a bloom. So
Hmm.
there will be something propping up the US Fed rate or the inflation. These are the common things that's going to prop up in the market. So investors
Hmm.
have to prepare when they are in the journey of wealth creation. These are the speed breakers, or these are the bumps investors need to always face. So my advice to the investors is, of course, we need to prepare for all these macroeconomic moving parts. Whereas at the same point of time, investors need to uh, be in the market at a staggered manner, keep the cash levels at a sufficient level. Every portfolio need to have 20 to 30% cash level in their portfolio. And investors
Hmm.
has to keep in mind one thing: whenever they get a fabulous returns in short term, excessive returns in short term, that is the time they need to book profit, and
Sure.
cash can be a king in the portfolio. So whenever
Hmm.
these kind of macroeconomic things that surfaces the market brings the market to come down, that is the time investors to need to enter at a staggered manner. The worry is,
Right.
if the market is coming down and investors are fully left out of the gunpowder, that is cash, that is the problem where the portfolio is going to suffer. So investors need to have a strategy. Whenever there are excessive returns in your portfolio, they need to book some profit and stay on cash. And the macroeconomic things, if I have to tell, the Fed is not in a hurry to increase the rates immediately. And with respect to Delta variant is concerned, of course, the vaccination drive is at a full throttle. Yesterday, I had my Sputnik vaccine. So
Okay.
the new vaccine also is available to the public. So
Sure.
uh, so I believe we are on a right track. Okay, but one thing investors always need to keep in on cards is a sufficient amount of cash levels in their portfolio, and in a staggered manner buying the chips at attractive levels. This is the important strategy they need to maintain, because as a retail investors, it's not possible to track all these moving parts every time, because
Sure.
since you and
Absolutely.
me are there in the market day in and day out, we can track these moving parameters in a different manner.
Sure, absolutely understood. And I'm sure this is going to definitely help all the investors take note of the way they should strategize and, investments and, balance out their portfolios by keeping some liquidity and cash also at this point in time available with them, so that they can enter into the markets when the time is right as well. And, when you get better opportunities at our lower levels, all of those as well. Let's now go on to talking about, specific stocks which you have been recommending to us and to all our viewers in the past, which have given robust returns. Star picks is what we actually call this segment, where we discuss some of the past stocks that you've recommended and they've given sharp returns. And just like how you pointed out, in a short duration, they have given tremendous returns. Let's talk about first Gland Pharma. You picked out this stock at a time when the pharma theme was just starting up, and we had been seeing some of the companies, playing up the vaccination part as well. And Gland Pharma was at the forefront of it. And we've actually seen the peak return of almost 36% from the time that you had recommended this stock to us. Your take on this stock right now, since you also believe that the pharma stocks will continue to reap in the benefits of positive earnings, what should you do with Gland Pharma for all of those investors who invested after your advice?
Sakshi, with respect to Grand Pharma is concerned, the company is on a right track. Their earning visibility is clear. But this stock has run up very quickly, nearly 36%. We advised this stock on 3rd June on your show. So just less than 45 days, the stock has given nearly 36% returns in past 45 days. So at this juncture, investors can take some small profit from the table. At least they can book, if they are holding 100 shares in their portfolio, they can looking at booking nearly 25% of their portfolio, 25 stocks, they can book profit and stay on cash. Any dip the market gives during the market momentum nowadays, they can try to re-enter. That's how they can position themselves because the stock has witnessed a sharp uptick in the stock prices. But the fundamentals are intact, and the company is management is one of the high quality management in pharma sector. Last 25 years, they have not received any US FDA warning. That is the quality and quality of their production levels. So investors, they can buy at any dip. At the same point of time, those investors who entered a month back or 45 days back in the same levels what we advised the investors to invest, they can book some small profit from the table.
Sure, understood that as well. Let's move on to the other stock that you had recommended. I think in the early times of this year, around February, and that was ABB Power Products. Now, this stock also, in just about a few months, has given a peak return of almost 70% to investors after your recommendation. So, congratulations first on to that for picking out this topic for all our viewers. Help us understand your view right now on the stock. Fresh investors who are watching the show right now who may want to enter, is it the right time? Should they wait? And for those investors who had the position here, what should they do?
Sakshi, investors who want to invest in these kind of stocks, these are the thematic stocks, which are power infra story, which is going to emerge over a period of time. We can consider these are the stocks which are unlocking trade, unlocking of the economy. So right now, and one of the interesting theme that is there in this company is they also want to set up electric charging infrastructure for the four-wheelers and also soon to the two-wheelers, and they're one of the strong company with respect to power infra is concerned. So currently the stock is trading at 1927 levels. Investors who want to invest in this company, they can come and invest at a staggered manner. If they want to buy 100 shares, they can start investing in this company. They can start with 25 stocks in their portfolio. But it's going to be a portfolio thematic stocks for the investor with a strong pedigree. So investors, and as the theme emerges, the company is going to deliver good returns. But investors who have invested earlier, they can book some small profit from the table because the stock has delivered nearly 70% return in past 6 months.
Sure. Absolutely. So ABB Power booking partial profits or 50% of your profits is advisable for all those investors who invested at that time when Sir had recommended it to our show. So keeping that in mind, you should actually move forward with your investments in ABB Power as well. And now time to talk about a new pick that you have for all our investors and viewers right now. Is it going to be same sectors that you talked about, IT, pharma, which is your new pick?
Sakshi, we have today Wockhardt Pharma. Earlier also we advised the stock at 420 level, and the stock went to a level of 820. And we have observed with low volumes, the stock has corrected some amount of profit booking that happened in this price range. Of course, earlier the investors have made tremendous money with respect to their investments are concerned. But still, we believe in the fundamentals of Wockhardt Pharma. The stock is in the range of 570. Investors with a long-term horizon, 1 year horizon, definitely they can enter into the stock. The earlier investors who have bought also, they can re-enter into the stock, given the nature of uptick that's going to happen in their earnings is concerned. And also the valuation and margin of safety of the Wockhardt Pharma is concerned, Wockhardt Pharma is in a well position in the pharma sector. It is slightly considered to be a risky stock in the nature of investment is concerned, but definitely the stock can deliver very good returns in coming quarters. So Wockhardt Pharma is the invest. Definitely they can consider with a high margin of safety and also potential upside of the stock price is concerned.
Absolutely. So 25% upside on Wockhardt Pharma up until maybe a year's time is what you could keep in your mind in case you want to play the pharma theme, the vaccination theme, the healthcare space, and all of this amid COVID-19. So that is one stock that you should keep on your radar. Thank you very much, Mr. Patini. Pleasure speaking with you and taking all the insights on markets and these recommendations also for all our viewers.
Thank you, Sashi. Pleasure is mine always.
Okay, and then let's now move on to see how the markets are really tracking at this point in time. Well, both the Sensex and the Nifty moved to the high point of the day at half time, and strong returns can actually be seen today. 620 points added for the Sensex. It's inching closer to the 53,000 mark as well. 1.2% uptick for the Nifty too, and it's holding up above the 15,800 level at this point in time with an addition of 180 odd points. Now the Nifty Bank is also really climbing up higher. It's performing better than the benchmark indices. 1.4% uptick seen here, almost 475 points added, and it's inching closer to the 35,000 mark too. Was actually outperforming the markets right now is the small cap index. 376 odd points added here, 1.5% uptick right now can be seen. 26,378 is the level. What's underperforming right now, however, is the mid caps are out of the whole basket, but still the market momentum is holding up quite strongly. It's the day when the bulls are actually raging back, trying to cover all the lost ground that they had in the previous two trading sessions. Let's look at how the sectoral picture is developing. We had seen all the sectors performing in the green in the early trade, and yes, it's the same picture with more additions in realty, over 2% uptick, 1.5% uptick for both the PSU and private banking sectors too. Similar trend can actually be seen for the financial services as well. Now when we talk about the pharmas, they are up about 0.5% in trade. Similar is the case with the autos and the IT stocks also. The IT stocks are actually 1.4% uptick can actually be seen here. Strong momentum after some days of declines. And the FMCG index is inching up higher as well with 1% gain. So all in all, it's a day of gains. Metals, you look there. That's one index that's also shining quite brightly. So two indices at the forefront, metals and realty, the others following into as well. Let's talk about the Nifty gainers and the losers as well. For the Nifty gainers, it's Bajaj Finance up almost 4.5% in trade. Strong move there. JSW Steel, Tata Steel, the other metal counters that are shining bright in trade. Tech Mahindra and Bajaj Finserv. So Bajaj Twins have now moved up higher. Both of them forming a part of the top 5 Nifty 50 stocks at the moment. Let's look at the laggards as well and see where the stocks are dragging in trade. So more declines coming in for Asian Paints after those record high levels seen on the Tuesday's trading session after the earnings that were reported quite robust. Eicher Motors, Cipla, Nestle India, and also M&M. These kind of stocks are actually down by 0.5% almost. So some pharma counters, FMCG counters, auto counters actually declining in trade right now. But overall, it's a positive day of trade. We'll just have to see whether any kind of selling pressure really comes in at this kind of a level in the last half of the trading session or the last 2.5 hours of trading session. Other than that, it's a positive day. We are getting positive cues from across the globe as well, which is supporting the kind of move. But anything can really happen because it's, again, the weekly expiry day. It was a truncated week of action. So you never know how the investors really play up in the last 2 hours. We'll keep you posted for that. And for that, you need to like and subscribe to our channel. Hit that bell icon so that you can get notified whenever we add a new video. And also stay connected with us through all our social media platforms and on our website, money9.com. Thanks for tuning in.